Uh, I want to show and record a different Bollinger Band strategy. So here the strategy is very simple. Just add two Bollinger Bands in your chart. This you can say intraday strategy. Add two Bollinger Bands and in one Bollinger Band change the length to 10. You can keep it 20, but for this experiment I selected as 10. Time frame I have set it as 1 day and save this. Just change some settings related to the style and all, just to see it differently. So I have done that. Then add another Bollinger Band. Just change the length to 10. Keep the time frame to chart time frame. Now observe couple of things. So whenever price comes close to the top Bollinger Band here into the daily Bollinger Band region and it crosses this Bollinger Band, the 15 minutes or hourly Bollinger Band, just put a line here and go and check where it crossed the previous Bollinger Band. So here in this case it made the high here at this point, right here, somewhere here, right? Now in this case you can consider a short here, you can consider a short trade here, put a stop loss here, just put one stop loss here and target to the lower end of the Bollinger Band, something up to this zone you can say, and the stop loss is here. So eventually you can see on this day the fall happened from this point up to here. Your stop loss is this much and you got more than how much? You got more than 1:3, 1:2, more than 1:2. Now similarly, let's see the next time it did that. At this point, if you observe, the price is not very close to lower Bollinger Band, so I won't recommend buying here, even though you may try your luck, but your stop loss is very far. Next time again this happened, so we did this with comparison to this level, we compared and we took a short there. It is very close to that level, we took a short. Next time, this is the last time where it crossed the high, and you can again it reached close to this Bollinger Band area here, upper Bollinger Band, and you can put a sell order here, right? This is your area and your stop loss is above this Bollinger Band. You are looking for 1:2. Okay, you are looking for 1:2. In this case you can see it even went below 1:2. If once this 1:2 happens, you can shift your stop loss. So this is where it happened, right? 1:2 approximately. This is where it happened. It's not even 1:2. Here it is 1:3. It happened here, but you can start moving your stop loss from here. You may move the stop loss to this region, and then you can follow this moving average line, the line that is there here, right? This moving average line can be followed. Eventually it crossed the moving average line here and you can exit somewhere here, somewhere in this region, which is a good money in 3 days. Now coming to this part here, now as per theory it crossed below the Bollinger Band here and it went on in that mode for quite some time. Eventually it pulled back inside the Bollinger Band, right here, this zone. It pulled back inside the Bollinger Band. And now draw the line here again, and first draw this line, go and left side you see. What happened this time? This made a lower low compared to this level where it crossed last time, or even if you consider this level where it crossed the low last time, this is a lower low compared to this. So you are not going to go long here. You are going to wait for the short opportunities, right? You are going to wait for the short opportunities. Now what it did, it reached and crossed this point this time. So here it crossed this point. Now your stop loss, now this is a risky place to have a trade because the stop loss will be high. There is no candle here which is crossing above. So but we identified the level here, right? This is our level here, this one, okay, this one, this candle high. We identified this level. Now you theoretically we should take short, but where is the stop loss? We don't know where is the stop loss. Go to the lower time frame, let's say 15 minutes, and see where you can put the stop loss. As per 15 minutes you identified this zone, right? This is not very far away. You identified this area. You put this stop loss, same 1:2 rule you can apply. This is the candle where it got that, right? So the stop loss will be here, or you can even put this as the stop loss. This is the previous high, you can say. So this is almost 300 points. This is Bank Nifty, so 300 points stop loss, and you place your order. Place your order here somewhere in this area, and your stop loss is there. And so this is again more than 1:2, right? You can see here. If I go back to 1 hour chart, you can see that stop loss is kept here, and we have a target here. Then once it crossed this low and moved back, we will check what happened to the previous position. This is the previous low, and this is the previous high. This previous low is not below this. It's not a lower high. It is not a lower high. It is a lower low. Okay. Sorry, it is not a higher low, but it is a lower low. So now you see here, it did a pullback, and it crossed this last high where we took the trade. This crossed. Now the recent low that it made on Friday, this is the recent low it made on Friday, and if you observe carefully, price did a pullback and went inside this zone. It is above, it is actually made a higher low. At this point it is a higher low, and price moved inside the daily Bollinger Band zone. So this means if we want to take a chance, ideally or weekend trade is risky, but for sake of discussion, if we have taken a trade there, this is how the trade will look like, and you can have a target up to the top of the lower time frame Bollinger Band. It is almost 1:2, right? So this is telling, based on hourly, next 1 or 2 days there is a higher probability to see 56,254, and there is also a higher probability for this stop loss to hit. So this two Bollinger Band method, I didn't find any video in the internet, so I am sharing this information. You can try using it. Thank you.